Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Stephen Innes, Chief Global Market Strategist at Axie. Now, Steve, great to have you on the show.
Thanks, Brian. Thanks for having me.
Now, before we start, let's take a look at how markets in the region are performing. Now, if we look at Bursa Malaysia is down 0.7% at 1,605.46. The SGX is at 3,136.01. It's up 0.25%. If we look across the region, however, it's a sea of red. The Nikkei is down 0.4% at 29,057.86. Shanghai Composite is down 1.25% at 3,400.46. Hang Seng is down 1.46% at 28,465.18. ASX 200 is down 0.12% at 6,744. And rounding off, we have the Kospi, which is down 0.75% at 3,012.59. So, sea of red, what's the reason for that, Steve?
You know, there's no one reason. There's probably a plentitude of reasons. Obviously, the headlines that are getting generated out of the developed markets in Europe and the US regarding possible lockdown, either extensions or reimpositions, are negative for exporters in the region. We've also got some considerable demand issues emanating in specific pockets where COVID is still a problem. I'm referring to perhaps India, Indonesia, some concerns in Malaysia, and some lingering concerns in Thailand, of course, hurting the travel sector. So all these different problems are coming to a head. We've been focusing mostly on inflation impacts in the US, which is pushing US yields higher, which they continue to do, while we had a little bit of a respite. But this is also weighing negatively on a big pocket of growth segment in equity markets around the world. So everything's sort of a little bit negative flavored today in Asia.
And also, Steve, you talk about negativity. US February existing home sales actually fell much more significantly than expected, 6.6% versus forecast of a 2.9% decline. Now, what signals does this send to investors, especially ahead of crucial congressional testimony from Jerome Powell and Treasury Secretary Janet Yellen?
Yeah, you know, it's a double-edged sword. I mean, on the one hand, it assuages some of the inflation fears, but then again, it brings us back to the economy's not so zoomy, and this is a problem for elements in the markets. However, you could probably write the decline down to the weather effect in Texas, ridiculously high lumber prices that are holding builders back from actually building homes. But we have to see how this pans out. You know, one data point doesn't make an inflection point. I really believe in housing markets will come back quite convincingly in the new year. People want to move out of multiple dwelling apartments into single unit houses. And I think this should continue to be the flavor of the day going forward.
Now, Steve, you're speaking about bad weather in Texas. And that led to initially a spike in oil prices, because of the supply squeeze. But that's recently, in the last couple of days, there have been an implosion in oil markets in terms of prices. What's caused this massive change in sentiment?
There's been a big shift in what I refer to as a technical element of the market, where there's been a lot of investors buying on oil ETFs that have sort of left because the term structure's gotten incredibly wobbly. So that guaranteed yield and carry return isn't there right now. And that's a big part of the market that really was playing on that reflation trade isn't there at the moment. And that's a bit of a problem. But we've also got these headlines around COVID, possible reimposition of restrictions in New York. These are negatives. These are short-term negatives. But really, I think what it all boils down to is that, we still got a long ways to go in the demand side recovery. And oil prices shot over $70 on sentiment alone. That sort of disconnect is probably bringing oil prices back to earth rather than any of the headlines right now.
And so what's your target price range for oil in Q2?
65, 70, we're here right now. And this is probably the worrisome part from a speculator's perspective, like I am on oil, is I don't see a lot of upside. I'm not a super cycle fan, so I don't really looking at other assets really to buy rather than oil right now. And maybe other traders are doing the same as I am right now.
Okay. And what events and data should we be looking out for this week that could move markets?
Well, the purchasing managers index data that are going to be released around the globe are significantly important. That'll give us a forward look into what purchasing managers are thinking. I think it's going to be favorable, and I think it's going to be risk supportive. But on the other hand, if these guys are thinking pent up demand again, that also has that double-edged sort of an inflationary impact. So, as inflation ebbs and flows, that's going to be the nature of how we're going to be analyzing risk markets, unfortunately, for the next little while. And of course, we can't avoid the dovish duo of Yellen and Powell talking to Congress. I expect that to be overly dovish, and I continue to suspect them that will continue to water down the inflation expectations. That should help risk markets to a degree, but as we saw last week post FOMC, traders went right back on the attack and challenged the Fed narrative, and I expect them to continue to do so throughout the week.
Hey, Steve, thanks again for your insights, as always.
Thanks for having me, Brian.
Now, we've been speaking to Stephen Innes, Chief Global Market Strategist at Axie on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.